If you're currently running a done-for-you funding offer or you're thinking of switching over to done-for-you, then you probably have a lot of questions, just like I did back in 2022 when I switched over my own offer to done-for-you model. So you might be wondering about the legal aspects of handling people's information and submitting applications. You might be wondering about what happens if someone actually gets the funding but they don't pay you. And you might be wondering about the entire process of actually scaling the offer and building out your team. So in this video, I'm going to share with you everything that I've learned by scaling my own offer and also what I found online so that you know exactly what I've done, the mistakes I've made, and how you can best move forward. All right, so let's go over done-for-you funding offers. So quick disclaimer, I am not a financial expert nor a legal expert, it's only for educational purposes. So we'll start with legal and what you should know, pricing your offer, delivery and scaling, and finally collecting payment and what happens if you don't get the payment. So we'll start with the legal. Legal is very important because you should always be protecting yourself in case something wrong happens. So in this case, we're handling a lot of personal information on their credit report. We're handling their applications. We are also going to be working with the banks, and we're in the lending sector, so a lot of different things. So it's very important that you understand what I'm going over right now. So number one, it's a performance fee. If you're charging a percentage of the funding amount, you're actually not allowed to call it certain things like a commission unless you're a licensed broker. Because if you do, you might get fined, you might get a lawsuit. So it's important that you do not call it a commission and instead you call it a success fee, which is what we did, or a performance fee or a consulting fee. And you also have to disclose upfront how it's calculated and when it is to be paid. Next, you might have an upfront fee. So we also had an upfront fee to pay for our ad costs and acquiring our clients. So we had to, again, structure it correctly. So, however, the advanced fee ban, which is a federal rule, prohibits charging upfront fees for credit repair or for loan modifications, which is what we're doing right now. So instead, you have to structure it as an admin fee. Okay, so it's allowed if it's non-contingent on results, meaning that it is not based on any funding amounts. It's a set fee and it has to be disclosed early. You also need to disclose the refund policy, so clearly stating if it is refundable or not. So you also should have a contract in place. So the contract should include the scope of services. So what are you going to be doing for the clients? Are you giving them a funding sequence and they apply on their own? Are you actually applying for them on their behalf to the banks? Are you putting them in contact with different business bankers? On the optimization side, are you actually clearing and fixing their credits? Are you going to be helping them set up your LLC, right? So there's probably a lot of things that you do inside of your offer, and you need to clearly outline them in a way that it's everything that could potentially happen, basically. You also want to clearly state the fee structure and the terms, the refund, and the conditions for termination. Okay, so when is the contract officially over? Is it after a set funding amount? Is it after no communication after 30 days, for example, right? What is the termination here, right? It could also be when both parties agree, for example. And again, disclaimers, liability waivers. Okay, these are very, very important because, again, you can't really guarantee the results, right? Thankfully, the funding space is very predictable if you optimize correctly and you apply the right way, but we can't guarantee any funding amounts or even approved at all. So you need to clearly state this in your contract and also when you first talk to them on the sales call, but most importantly, on the actual onboarding itself. So clearly state that you're going to do your absolute best. Again, banking is very predictable because we know exactly what to do and what they want. But at the end of the day, it's really up to them to make that final decision. And liability waiver, so you don't want them to basically get you in trouble for denials or terms being unfavorable. Okay, so clearly state everything in your contract. Next, we have credit repair. So if you do include credit repair in your offer, okay, which at some points we did, we had, for example, at one point we would do the inquiry removal because that's a very fast and easy way for a client to delay the entire process. If you submit applications and you want to submit another round of funding, but their inquiries are holding you back, right? So we would actually submit the applications for them, and then we would clear the inquiries and apply for more funding, right? So that was a great way for us to basically speed through a lot of funding applications and get massive results very quickly. But we need to follow certain rules, okay? So we cannot make certain claims, right? We cannot and we must have certain contracts. They should also have a 3-day cancellation if you include or you sell credit repair, and you do not or you're not allowed to have advance payments for credit. Okay. So basically just following the laws here. I'm just laying everything out for you so that you understand what to think about and how to go about it. Next, we also have marketing. So this is very obvious. Okay. So we can't have any ads or any marketing saying 100% approval guarantee or instant funding, right? So just basically, again, having different type of language that makes sense, that would be allowed by the Facebook and Meta platforms, but also law in general. And finally is the client information. So you really want to securely store client data. So there's a lot of different ways to do this, but one way that we would protect client information was on JotForm. So whenever you have a client that gets onboarded and you need to collect their information when it comes to their basics, like their address, their name, their credit report, but also their socials, right? We also would ask for their business information, such as the articles of incorporation, the address, the email, and all that. So basically all the details that we would possibly need from the client. Well, it's very sensitive, right? We don't want that leaking and us being liable and responsible. So we would actually use JotForm, and we could encrypt all these different submissions, basically. And so the only way for myself or anyone to access these is to have a very long password. So that's something I would recommend. Whenever your clients provide you any type of information or documentation, ask them to submit it through some kind of encrypted format, which really protects you, okay? So that's one way to do it. Another way is to use a specific credit repair software. If you are doing credit repair, is to use a platform like Credit Repair Cloud. So whenever we did the inquiry removal or even helping them with negatives, we would use this platform to collect the report, because you can attach it to a reporting software like MyScoreIQ, and you can also dispute everything, upload the documents. So I'll have a whole different training about Credit Repair Cloud in a separate video, but you want to be very meticulous when it comes to their information and caring, right? They don't want their information to get leaked. You should care about their information being leaked. So be sure you take the right steps to protect it. So that's all the legal right there. Okay, so some of the most, kind of higher level information, but hopefully it's very clear for you. All the things that you should know that I wish I knew when I first got started. And so that's it right there. Next, let's go over pricing. So basically with pricing, you have two different options when it comes to upfront pricing. So you either have the free, which I do see some people offering that. It's obviously a much easier sell, right? Get into the system, doesn't cost you anything. You only pay us money when we get you funding. But to be honest with you, although this sounds good in theory, you can maybe get some more clients, you're going to get stuck at step number 1 for the longest time, because basically there are certain things that need to happen whenever you onboard a client, and they need to basically get optimized and ready for funding. And if there's no commitment on their part, no investment, they're going to be very slow to go through their steps in the process. So really, free might get you more clients in theory. You're not going to get a lot more funding results, because again, everyone's going to be stuck at step number 1. They might even still shop around for other funding offers, and you might be stuck in a situation in which 2 people are applying for the same client, which has actually happened to me one time. So ideally, I would recommend against the free. It's obviously your business, you do what you want, but although it might be easier to sell, it'll be a lot harder to fulfill and actually get results on the back end. So if you were to charge a free upfront, I have seen people charge between $500 to $2,000. So we actually charged closer to $2,000 ourselves. So we were charging $2,000 for basically the entire time. And that's because we have costs involved with getting clients. So we have costs with actually running ads. We have costs with the sales team, right? So there is a cost to actually get the customer. So ideally, I want to pay myself back, pay my team back, pay my company back right away once we actually do close a deal, versus having to wait potentially weeks or months on the back end from the success fee. So if you can do this upfront, ideally with a higher amount like the $2,000, you might be more expensive than say some other done for you companies. But if you pitch it correctly, you tell them about all the support and the hands-on experience they'll have, how much of work is going to come from your end that they don't have to worry about, right? That allows you to really stand out. And by having a $2,000 fee, they're going to be a lot more invested as well, right? So now they're actually going to take the steps. They're going to engage with you. They're going to really look up to you when it comes to actually following directions. So I like to charge higher amounts, But the very bare minimum, I'd recommend at least 500 because you do have fees to get these clients, and this is going to help you basically pay yourself back without being constantly stuck below water trying to survive and waiting for these success fees to basically stay afloat and grow. So with 2,000, it's enough to basically pay for all the acquisition costs and also pay to get the next client. So basically you can keep scaling very fast. For the success fee, I've seen as low as 5% all the way up to 10. I don't think I've really seen too much over 10, to be honest. 5 is really on the low end. That's really if it's like a friends and family rate potentially. Most of the time, it's either going to be 8 or 10% in most cases. So we were charging $2,000 upfront, again, as the admin fee, and then we had 8% on the back end. So basically, if we got a client on average $100,000, well, that's $10,000 total, right? Admin fee of 2, success fee of 8, so that's $100,000 in funding, and that would get us about $8,000 per client, which is pretty awesome. So that's basically how you would want to structure that. Okay, so we're going to talk about the actual collecting of payments and everything else, but that's how I recommend setting up your success fee and your upfront pricing. The success fee is basically really articulating to them that you're doing all the work, you're going to get them the most amount of funding possible, and they don't pay you unless you get them results. So it's a pretty great offer basically when it comes to the actual pitching of the offer itself. So that's how you'd want to structure it right there. Next, we have the delivery itself. So this is where it gets a little bit more complicated. Okay, so it might be easier to sell, but it is harder to fulfill because you have to do some work now, right? So it really breaks down to 3 main aspects right now, which is going to be stage number 1, the preparation of the client, the optimization. Number 2 is the applications, the funding. Number 3 is collecting payments and making sure that you actually get what you need. So with the getting ready of funding, so the preparation work, this is going to be very big because this is most likely going to be the thing that holds you back the most as to scaling your business because a lot of clients are going to be stuck in this stage. Okay, so right now you're going to be bringing in a pipeline of clients that are coming in, right? They're going through optimization right here. You want to get them to funding, but there are steps to get there. So ideally you want to get them to the funding process as fast as possible because this is when you actually make money, right? So the way that I would actually help my clients get through optimization as fast as possible is through sometimes offering some of the credit repair solutions ourselves. So we had a credit repair specialist, and he would submit all the inquiry disputes, all the address and name clear-ups as well. And if we had any negative accounts, then we would submit the letter process, although we actually have a 5KO, accelerated repair. So we would actually charge them an additional fee to get access to my accelerated repair process. So that is a one-on-one. We're going to work with them. We can't actually submit it for them because they have to submit certain reports and do certain steps that I wouldn't be able to do on my own or for them. So we would actually charge them an additional $2,500 to $2,000 to do the accelerated repair. Otherwise, they basically get stuck in credit repair. So that's why if you're doing a done-for-you offer, you should actually really vet the clients that you work with because you don't want to be stuck again in this optimization. So if you're bringing on anyone, you're going to have too many people stuck here, which basically means you're going to be clogging up your pipeline. You're going to have a lot of work without actually getting paid for anything, right? Because the admin fee really isn't what's going to grow your business. It's a success fee. So ideally, you might want to tighten up your process for actually getting the right type of client that's basically almost ready for the funding itself so that the optimization process is a lot faster and a lot easier. So we were able to open up a little bit because we did have that rapid repair solution. So we could basically take people that might have had a little bit of negatives. They had the money to pay us to do that, and then we can get them on the next steps. But if you don't have that accelerated repair, then you might have to basically narrow down the type of clients that you work with that would basically not clog you up too much or take too long to get ready. So we had basic requirements like if we didn't have the repair, would have been the good credit, no negatives, no high utilization, and I mean that's really it. Right? Ideally, you want to have some high credit limits as well, although you can fix that with authorized users. But really the main requirements are just going to be, the 700 plus score. Ideally, you want to have one high limit card and low utilization, which should be translated inside of that high score anyways, and then no negatives. right? But if you do this right here, really, these clients should be pretty straightforward. Even if you have to set up an LLC, I mean, the LLC process is very fast. And then preparing the LLC is relatively easy as well. But ideally, you want to have not that many steps again inside of here. But if there are steps, what we would do to actually make it even easier for them on the steps that we could not do, for example, maybe authorize user accounts or signing up for Credit Strong to beef up their credit, I actually create an entire portal. Okay, so I'd have a portal basically full of tasks of every single optimization task that would possibly exist. I'd always add to it if we ever ran into a new one. We would have an entire database of these. And then whenever we did an onboarding call with our client, we would basically take whatever's inside the database, we would add it to their portal. And so now they had the actual steps to follow. They could track the status, and we could track the status so we could help them. And they get all the resources. So it might be worksheets, it might be scripts they have to talk to the credit bureaus, it might be templates for letters, it might be videos walking them through. So again, making this process as easy and fast as possible for my clients only helps me. So that's it for the prep work right there. And for the funding itself, you really want to have clear communication with your clients, because if you don't, your clients are going to start to harass you basically, and they want to know what's going on, and you want to be a professional company at the end of the day, right? So we actually set up a professional dashboard for our clients. So I see a lot of people that use Excel, which you can, but I like to stand out. I like to go above and beyond for my clients. And so by having this, I can have a lot of information on here, and it's very intuitive. It's very easy to use. So inside of our own table, we would have the applications. So what bank are we applying for? If it's multiple cards, I might even specify what card it is. And then the status as well. Okay, so to do, stuck, or submitted, or maybe even in the works if I'm talking to an RM, so in progress. And then the result. Okay, so very clearly at any time of day, they can hop on here and they can see what's happening. So to do, if we got denied, approved, or pending. If approved, how much. Okay, so on this one board and one snapshot, they can see everything that's happening. So awesome resource right here. You can also, in this case, attach different comments as well. So for example, if I want to give myself some notes or some data, or if I want to basically communicate with my client, they can ask me questions on this particular application right here. So having a portal really helps you stand out and really helps the entire process right here to get great results. So very, very key right here to have. And also, you can also potentially create a company-wide dashboard. So we would have this attached to another dashboard that basically tallied everything up. So we could see how many applications were approved or denied. We could see how much funding was approved for in general. So this allows us to track the results, but also we would track the payments as well, which is the next step, right? So we would say approved for. It would automatically create a formula for amount owed, and then we would basically add every single payment that they would submit to us so that we could basically try to coordinate whether or not everything was on track. So that's how we basically set up this entire process. This allows you to, again, make it very easy for you, for your team to hop in here and know exactly what's going on. If you wanted to even basically kind of coordinate these, I mean, we would have a credit specialist that, again, would fix the inquiries whenever we would finish a funding round. So I would attach basically a button on this board that said team only, and as soon as I clicked the button, it would go and find the name of the client from the board. It would then send it to my credit specialist team's board of to-dos, and then they would automatically know, okay, this client is ready for their next round of inquiry removal. So there's a lot of things you can do here, but the more systems you have, the more processes you have, the more SOPs, everything that's laid out only allows you to scale that much faster and that much easier. So then finally is collecting payment. So collecting payment is going to be the thing that actually obviously makes you money, that's going to drive the business forward. So we need to have this very dialed in as well. So for the collecting of payment, we really want to have a very basically laid out process that's very clear for the client. So we're actually going to go over this right now. So you want to have inside of your contract clearly stating the percentage of the amount, okay, so they understand it very clearly of how much it should be, whether it be that 5, that 8, or that 10, and when it should be paid. And also the repercussions for it not being paid. So we would have it basically stated that they'd have to pay us within 7 days of an invoice being sent or an approval being approved. So we would basically kind of trench it off. So we would have a minimum approval of $50,000, and above $50,000, then they would basically pay us for that first 50, and then every single application that was approved, they would pay us for that application. So basically, we would kind of get them excited about, okay, we're going to work towards that 50. That's like the minimum amount that we're shooting for, and then we'll charge you above and beyond. So you don't have to do that. You can do it based on every single one, but it needs to be clearly stated and what happens if they don't actually pay you. So there might be repercussions, there might be legal proceedings, there might be extra fees involved as well. So the more specific and clearly laid out it is, the better for everyone involved. So as soon as you do get an approval, then I would simply use Stripe. I would send out an invoice. You then allow them to pay directly with their credit card. I would tell them, hey, if we have that small success fee or that small admin fee at the very beginning, you can use your new credit cards to pay us the fee on the back end. It's a 0% card. You don't have to worry about interest for a long time, right? So it makes it very easy for you. So inside of here, I will just make it a credit card payment, and I send them the invoice with the success fee right here. I would also clearly state what it's for, and then that's it, right? That's the invoice. But again, you want to send these out basically immediately as soon as you get the approval. And thankfully, if you're the one submitting the applications, you should have a very good, basically, line of communication between you and the banks as to what's going on. They're obviously going to be the ones receiving the emails, receiving the credit cards. So something that we would do to basically verify information is ask them for proof as to how much they were approved for. So for example, most credit cards, they should say the limit on the actual mail whenever they get it. They might also get an email stating what they were approved for. So I want to see some kind of proof. But if we don't actually get it, I'll most likely have my credit specialist actually call the bank on their behalf and ask, hey, I'm excited that we just got approved. I just want to basically understand how much was I approved for, right? Just a simple call asking what was the approval for, and that way we can basically verify it. So part of our SOPs that actually ask them, and I have another button on the board right here, a button that would basically say verify. So if the application was declined, it would automatically read the board, and the task would be follow up and resubmit or push for reconsideration. If it was pending, I would say basically it would automatically read it, and the task would be to basically follow up. Hey, do you have the information you need? If it was approved, the task would automatically read it, and it would be all about just verifying the funding amount, basically. So again, making it very easy for that. But once you know the amount, we send out the invoice. That's the one thing with the done for you funding, right? You do have to have hopefully a good relationship with your clients so that there's a very clear line of communication. There's a good trust established, right? Because now they're paying you, but you're getting them results. Okay, so you just want to have a good way to basically verify all the information. And as soon as you do have that approval, right away you want to send out the invoice. So there's no delays, because the further delay, the more time they have to spend that money, and the least likely it is for them to pay you, right? So you want to send it right away. But if they don't pay it basically within perhaps, and of course we're going to give them some time to actually receive the credit card, right? But if they don't pay you within that 7 days, now you're going to start to set up an email sequence, okay? So we would have it basically inside of our CRM, Go High Level. I would just drag the contact over a certain tab, and we would basically have an automated email sequence of reminders. So every single day, it's going to include the details of the agreement. It's going to include the proof of funding, a clear deadline for payment, stating that the non-payment may result in additional fees, collection action, and legal proceedings. So all this in the background, we're going to have, hopefully a bunch of clients, right? So we don't have to worry about chasing everyone down every single time. So having processes like this, just like a drag and drop, allows you to clearly follow up with them with emails, text, maybe even voice message, and even maybe having like your VA reach out, right? But all of this allows you to stay on top of them. But unfortunately, in some cases, it has happened to us. It was very, very rare. I think it happened to us maybe twice really, a handful of times at most, in which we really weren't able to collect the payment at all. And so in this case, you do have different recourse. So one client, after a while, finally paid us. It was actually a huge success fee too. It was close to $30,000 because we just absolutely blew it out for him. But he did pay us. But we did have one person that just never paid us at all. It's up to you if you want to pursue them. We actually just didn't even pursue. We just kind of let it be. It wasn't a huge success fee anyways. But in some cases, you might be stuck with these clients that owe you potentially 10,000 plus, and they're just not paying you for whatever reason, right? So in this case, you do have some options as to actually pursuing them further. So one option is a small claims court. So this is like lower cost option. You're using the law and the courts in your favor. So in this case, you basically have to confirm that you're actually eligible. In most states, you have different laws and regulations and allowances. So they'll most likely land somewhere between 2,500 to max 10K. You also want to verify if the court, which court has jurisdiction. So it's going to be most likely where the client resides themselves. Then you need to collect the evidence. Okay, so showing them that they actually owe you money with the following right here. Then you can submit the file claim. Okay, you can do this simply on the website online. You would submit the form by going through the steps. You have to submit by paying the filing fee, which is typically around $30 to $200 depending on the state. And then they have to get served, okay? So you can use a process server or the sheriff office right here to deliver the papers. And then you get basically stuck with a court date. So you have to actually show up, you have to present your case, okay? And if you get the whole case in your favor, now you have a basically the ability now to basically enforce these payments with wage garnishments, bank account levies, and property liens. So you can do this entire process, right? The pros and cons I will dive into a second. The pros here is that you can submit it pretty easily. The courts are in your favor. It's a pretty low filing fee, but you have to be the one following up once you actually do get the court decision. So pros and cons here. The other option, which is probably maybe the easier option, is going to be just simply sending it to a collection agency. So in this case, you're going to send the contact information, proof of debt, documentation that you actually try to collect it. Then you're going to basically have them follow their steps and do their own work. So they're going to initiate communication through calls, emails, letters, and then they're also going to potentially communicate this information to the credit bureaus as well. So this might be something that you could tell the client, hey, you have good credit, you were able to get funding. I'd hate for your credit to basically go to a bad spot because we're having to pursue you for this debt. And most people that are trying to get this funding, they want good credit. So in this case, the debt collector could potentially do this process. And then at this point, the debt collector pays, they would deduct their fee, and they send the rest to you. If the debtor does not respond, they may have different processes to actually follow up on it. Okay, so I've never done it myself, but this is basically the process of what you could do to go and pursue the debt. So if it is a significant amount, maybe over $6,000, then it might be worth it for you to pursue it, right? Because in most cases, they might not even have an upfront fee. They simply collect on a percentage of the recovered funds anyway, so it could definitely be worth it for you. So here are a couple different examples as well. Here are the different services that are involved, okay? So for example, international collections, right? Flat fees, contingency based, right? And the fees itself are going to be most likely just based on a percentage of the recovered funds, okay? So it goes all the way up to 50%, unfortunately, but 50% of something versus 100% of nothing. So that's basically your option number two. So number one, small claims court if it's below 10,000. Number two, collection agency if you just want them to handle it for you and you're willing to pay more money. So pros and cons here, small claims, $30 to $200 for the filing fee, but no cost on the back end. Collection agency, you might not pay any fees on the front end, but more on the back, only if you actually get it though. Time is going to be about 1 to 3 months for a court date, longer for actually enforcing it, right? If you have to wage their salary or whatever, collect on their salary. If you have to collect from the bank, you're going to have to enforce the judgment, right? So in this case, you have to communicate with the bank that they owe you money. You have to communicate with their employer that they have to start to send you a portion of the salary, right? So it is a lot more work in this case, but it might be cheaper, right? Collection agency might take longer, but you're only paying a percentage of the recovered funds. They actually handle all the enforcement. So if it were me, I'd honestly probably go the collection agency route. Likelihood of recovery, it is, however, higher because of court judgment. It's a lot more serious. If you actually take them to court, they'll probably end up just paying you anyways, but collection agency might depend. Okay, so that's the entire process for actually getting paid. But overall, here are the pros and cons of doing done-for-you funding. So pros, it's definitely a lot easier to sell because you're doing all the work. You can pitch it as something that they only pay you if you actually get results. So we've actually seen a lot more sales when we were doing the done for you route. But the caveat here is that it's tougher to scale. Okay, so you actually need a really good team. You need really good systems in place. You'd have really good ways of getting your clients ready for funding. So it is a little bit more complex of a model, but you can make more money per client, right? Our highest client overall paid us close to $30,000 in success fee because he had a great running business. We were able to get some B-locks and some great limits. But you might have to run into collection issue problems. So although that was like our biggest client, you also kind of had us sweating for a second because we had to wait for the payment to go through. But overall, done for you options can be great. We had a community offer. We've had a done for you offer. We've had one-on-one mentorship offers. All of them have their pros and cons, but hopefully this training itself gave you more clarity on what you should know when it comes to having your own funding offers so you know best how to navigate moving forward. So that's it for the training. Hopefully it helped you. But inside, I mentioned a lot when it came to my team, my systems, my automation, and these are things that I give to my Credit Coach Academy clients. So these are credit and funding coaches that join to work with me one-on-one and implement every single system that I've used inside my own business to scale. So if you want to learn more about that, click on the link down below. But otherwise, thanks so much for watching. Hopefully it helped you. Drop a comment down below if you have any more questions. And otherwise, I'll see you in the next video.